Yes, so hi everyone and a warm welcome to our channel. I hope you're doing well. Studies and preparations are going on. So we have started certain revision videos for all the CA final students. Paper number 5 IDT, and that is going to be in complete 100% English, right? A playlist has been created. Chapter number 1 I have already covered, that covers certain introduction concepts and your supply chapter, right? So before starting with the official concepts, one thing very quickly, this is our Telegram channel. You can join it. The reason I'm asking you to join is because you have a lot of benefits. I'm covering MCQs. I've almost covered the GST MCQs totally. You can solve that. You can binge solve all the MCQs if you're new to the channel. I'm sure you will learn a lot of new points that might not have struck you when you were covering the syllabus, right? And updates and discussions, doubts also take place on the chat discussion group. Secondly, if you're new to the channel, ensure you're liking and subscribing because it helps me stay motivated. And if you genuinely like the content, then you can share this with your friends as well, right? Because this is the English revision series for all of you. Okay, so let's start. This is our chapter number 2, supply we have already covered. This is chapter number 2. So every chapter has a purpose. Chapter number 2's purpose is to talk about the charging section and to talk about the RCM FCM provisions, right? So what happens, understand that chapter number 2 cannot be read in isolation. It has to be read along with chapter number 4. Why? Because if GST is not applicable at the first place, the question of RCM FCM is not applicable. It is moot. So wherever the relevant entries are, relevant means the important exemptions are, for example, legal services, for example, GTA services, those I will be covering along with the exemptions. So this is going to be read along with the exemptions chapter for the interlinked entries so that the concept is properly clear. Yes, let's start. So let's start with the charging section. For CGST, it is section number 9. For IGST, it is section number 5. Both sections say the almost same thing. There are some differences when we talk about IGST. So what is the charging section? Section number 9 says that there will be a tax known as CGST on all the intra-state supplies. Now what is intra, what is inter? That is section number 7 and section number 8 that we have already covered, that in some manner, basically the basic coverage we did, that location of supplier and place of supply, if it is in one state or UT, that is an intra transaction. If it is different, it is an interstate transaction, correct? So section number 9 talks about the charging section that says that on the intrastate transaction, we are going to, charge a tax known as CGST. So there will be a tax known as CGST on intrastate supplies except two. So two non-taxable supplies with respect to goods in our GST law is first alcoholic liquor for human consumption, that is actually excluded from the definition of the GST itself under the definitions clause article 366 Constitution of India, and second is the 5 petroleum products that is given in 9.2. The short form is CGPAD. So the score is very bad. You can learn this code name. CGPA is D, that is petroleum crude, high-speed diesel, motor spirit, that is commonly known as the petrol that we fill in our vehicles, natural gas, and the aviation turbine fuel that goes in the airplane. So these 5 products are outside the scope of GST along with this alcoholic liquor for human consumption. Is this clear? Now, on what the GST will be applicable, the value which is determined under section number 15, that is covered in chapter number 6, the maximum CGST rate can be 20%, correspondingly SGST maximum can be 20%. You will find this 40% in IGST because IGST is the total of CGST and SGST. Is this clear? Then we talk about the RCM and FCM, that is 9.3 and 9.4. 9.4 has very limited applicability with respect to real estate sector that I will be covering in a few minutes. 9.3 is the main provision that we will be covering of notified goods and services. Now when I talk about section number 5 IGST, the same charging section, everything is same except two things. First, instead of 20% here the rate is 40. Second, there is a proviso stated here that with respect to the import of goods, already the custom duty is being levied. So let's give the power of levying and collection of the GST with respect to the import of goods to the customs law only. To under Customs Tariff Act section number 3, the power is given. So when we cover the customs, we also talk about the IGST. Why? Because the blessing means the power to charge IGST under the customs is given by section number 5 of IGST Act. Because it is very convenient, right? The customs officer are already levying and collecting the custom duty. So it's very convenient that IGST be also given responsibility to the customs officers rather than putting it here. Now a question, very important question comes for analysis is that, is import of goods under RCM? Answer is no. RCM means 9394 and import of goods is not under 9394. It is given to the customs under through the power of section number 5, that is the charging section. Is this clear? Now one more thing, this particular clause that I talked about, this particular provision that I talked about with respect to the import of goods, power to the customs law, that is not applicable on intangible good. And what is an intangible good that we know? Online money gaming, right? So that is very much in under our customs law, our GST law only, that I will be covering in the place of supply as well. Now let's talk about section number 9.4 or 5.4 depending the nature of transaction. This is a very specific limited applicability on the real estate sector. This is a specific case of RCM. Now what is happening here? The real estate promoters, the builders, they are being asked, basically see, this industry is seen as always a tax evasion industry. So there are stringent provisions with respect to real estate industry. Now what is happening here? First of all, the first case of RCM is that we have asked the promoters to buy all the inputs and all the input services except cement from registered persons, minimum 80% of purchases. So if I am a builder, my total inward purchase, that is the inward supplies of rupees 100, minimum 80 rupees out of that should be from registered persons. If there is a shortfall from that 80, whatever the difference will be with respect to that shortfall, whatever that shortfall is, into 18% I have to pay under RCM. So let's say my total expense was 100. I bought from registered person rupees 70. I had to, as per the law, I had to buy minimum 80, but now I bought 70, so there is a shortfall of rupees 10. So 10 into 18%, the GST will be paid under RCM by me. That is said by section number 9 subsection 4 or section number 5 subsection 4. This is with respect to the inputs and input services except cement. Now what about cement? With respect to cement, they are saying 100% you buy from the registered person. So not 80%, 100%. And whatever you buy from unregistered person, on that you will pay GST under RCM at 28% to the government. And what about capital goods? Inputs covered, input services covered. So basically these both will be inputs and input services including cement. With respect to capital goods, they say regardless of whether you buy from registered person or unregistered person, you have to pay GST under RCM at the applicable rate of that machine or whatever capital good you are buying. So this has a very limited applicability with respect to the real estate sector. Now let's talk about the main provisions of section number 9.3 and section 5.3, that is the notified list of goods. First we will cover goods, then we will cover services. First, cashew nuts not shelled, not peeled, basically in the raw form. Who is the supplier? Agriculturist. Who is the recipient? Registered person. Registered person will pay tax under RCM. Now first of all, you need to understand the meaning of agriculturist. Now see, agriculturist means we are covering only and only an individual or a Hindu undivided family, okay, and they are involved in the agriculture, they are doing the labor, or their family is involved in the labor. Family I have already covered. Who is covered in family? Spouse, children, parents. Parents, see, spouse and children always covered. Parents, grandparents and brother, sister only if they are wholly or mainly dependent. So that is the meaning of family. So as I was covering the definition of agriculturist, agriculturist means a person or a Hindu undivided family who is actually involved in the cultivation of land, or their family is involved in the cultivation of land, or maybe they have some labor, they have some servants, but there is a personal supervision involved of that agriculturist or his or her family. But if that person is, let's say, not involved in the supervision, his or her family is not involved in the supervision, they are sitting somewhere else and someone else is doing the work, they will not be covered under agriculturist. Firm, company, LLP are never agriculturist. We are only talking about an individual or HUF. The definition has been given. If you want, I will just give you the reference and you can pause and you can read if required. So agriculturist means individual or HUF that are taking cultivation of the land through their own, on their own, or at least personal supervision should be involved. So basically we are not covering those people who are very rich, and they are not actually involved in the process. They are just sitting here, they are not involved in the process. They are just sitting somewhere else and some work is done by the servants and labor. Is this clear? Okay. So here the supplier is agriculturist, recipient is registered person. Tendu, that is known as the BD wrapper leaves, the BD like a cigarette. So wrapper leaves, that if it is supplied by agriculturist to a registered person under RCM. Tobacco leaves, same, agriculturist to a registered person. In all three, this is absolutely same. Supplier is an agriculturist, so not a very involved in GST. Let's give him some benefit. And if the recipient is a registered person, they are going to pay tax under RCM. Now, fourth is the essential oils other than citrus fruit. So fruit involvement is not there. Other essential oils, example of namely peppermint or other mint. Other mint examples: spearmint, water mint, horse mint, bergamot oil, or mentha arvensis. So these names you don't have to learn per se. You can read this list twice, because if it comes in the exam, that it can maybe click. Yes. So here the supplier is unregistered person. Why they have written unregistered rather than agriculturist? Because these oils are not grown through a cultivation of land, but the focus and the feel factor that I always say is same, that we are going to give the benefit to an unregistered person. Recipient is registered, tax under RCM. Next, silk yarn producer. Who is producer? Manufacturer of the silk yarn from the raw silk or the silviculture process that is being done. So silkworm cocoons for the supply of silk yarn. Again, recipient is a registered person. Raw cotton, same, agriculturist to registered person. Now always pay attention. Question may try to confuse you that I bought raw cotton from a agriculturist, let's say, and now I sold it to a trader. So if the question is talking about the transaction, the second transaction of sale, and they are just mentioning raw cotton, their RCM won't apply. RCM will apply on the first transaction when I as a registered person bought from agriculturist. So always pay attention which transaction is being talked about in the question. Next, lottery. Lottery is a state subject. So when the supplier is state government, UT or LA, not central government, and the recipient is the lottery agent or the lottery distributor, he is going to pay tax under the reverse charge mechanism. Yes, so here central government you don't need to learn. Then whatever the government has various goods which it has seized, which it has confiscated, or whatever disposal it is doing. So used vehicles, seized and confiscated goods, you know, under law, including under GST law, a lot of times confiscation happens of conveyance or maybe goods. So that is covered here. Yes, so that particular goods, if they are supplied or any other waste or scrap is supplied by central government, excluding railway. Railways is the Indian Railway now is completely under the proper compliance of GST. FCM applies, all the compliances are being taken place. So here we are talking about central government except Indian Railway and other levels of government such as state government, UT or LA. So all the three levels are covered. In lottery, central government is not covered because central government is not involved in the picture with respect to lottery. Here the recipient is the registered person. If unregistered, then RCM won't apply, FCM will apply. Then priority sector lending certificate, this I have already covered in chapter number 1, bank to bank, but the recipient, because it is getting a benefit, will pay tax under RCM. Metal scrap, very important. Metal scrap, I have uploaded one GST short. If you can understand basic Hindi, then you can watch that. Otherwise, you can at least see the notes, the 3 pages notes I had circulated on the Telegram channel with respect to metal scrap. You can do that, you can read that, it will be a good compilation. Yes. So metal scrap when supplied by unregistered person to registered person is covered under RCM. When supplied by registered person to registered person, it is under section number 51 TDS. I have just given you a short summary. Okay. Now let's talk about the services now. Now services I will have to link with the GTA. I will have to link with the exemptions as well. So question number 1 you need to answer in exam is first of all whether the GST is applicable or not. If the GST is not applicable, then the question of RCM FCM won't arise. If GST is applicable, means the exemption has failed, the RCM FCM question will arise. So first we will talk about GTA services. Now let's first cover what is the exemption related provisions with respect to GTA, right? So there are 3 entries. I will be talking about all 3. So when I cover chapter number 4 exemptions, I won't be again covering the GTA or whatever the exemptions I'm covering here. So please pay attention because this has to be studied. This has to be studied in conjunction. You cannot study RCM in isolation. Correct? So first of all, sir, understand what is the meaning of GTA. GTA means twin conditions need to be complied. Number 1, GTA means they are providing services in relation to transportation of goods by road. Not only the service of transportation, but services in relation to transportation. For example, loading, unloading, some insurance related thing, storage services given. So that is also covered in the GTA. And second, the GTA is issuing a consignment note, that is a yellow colored small consignment note, which basically gives the details of who is the consigner, who is the consignee, who is liable to pay freight, what is the origin of goods, what is the destination of goods, what goods are being carried out. If consignment note is not issued by a GTA, it is not a GTA. So let's say I have a Mr. Golu Bhaiya who has a truck here and he transports certain goods by road. He does not issue consignment note. He just did me a favor. I paid him something, but he did not issue consignment note. That means he is not a GTA. Now let's understand the exemption. 3-4 exemption entries that you need to understand from various point of view. First is the general exemption that whatever goods are transported by road are exempt except in case of GTA and courier. So here the GTA won't be able to claim exemption, but let's say there is a bullock cart or that Golu Bhaiya in my example, that will be exempt because it is not a GTA. So courier, for example, DTDC, and GTA, for example, the conditions which are complied, goods transport agency, the operators, they are covered under this exemption. Next, there is a specific exemption with respect to what goods are being transported by GTA. So if these are goods which are being transported, that is, here there is a sympathetic point of view, the necessity point of view. So see, relief material with respect to any accident or disaster, defense equipment, so important for our country, newspapers and magazines which are registered, important for right of information to disseminate information, agriculture produce, milk, salt, food grains including pearls, rice, flour, again a part of basic staple food for a lot of Indians, and organic manure, again somewhere linked to the agriculture. So if GTA is transporting these goods, then the GTA, whatever the amount of GST is on the GTA freight, will be exempt. Next, if the recipient, now this I will cover in a couple of minutes. I will first cover this and this. Okay. then I will cover this, because this is the most important exemption that will be linked with our RCM. Now pay attention. First I will cover this particular exemption, that if recipient is certain government related bodies, then also the amount of freight is exempt from the GST. So first, any department of central government, state government or union territory. Next, any local authority, or third, governmental agencies which are solely registered for the TDS purpose. In that case, it will not be it will not be covered under the GST. Yes, so three people: department of government, both the, not the local authority, central, state, basically the two levels of government are covered. Next, local authority, and third, the governmental agencies which are solely registered for TDS, they are not making any taxable supply. So if recipient are these three people, and you know what is the meaning of recipient, right? Recipient means the person who is liable to pay the freight. So in that case, if these are the recipients, then there will be no GST. Clear? Now we will understand this. This is the most important entry. This will be linked our RCM. This will be asked in the question. If the recipient is other than specified recipient, if the recipient means the person liable to pay the freight is other than specified recipient, then it is exempt. Now what do you mean by specified recipient? It includes basically everyone other than an unregistered individual. Now see, a factory which is registered under the Factories Act, society which is registered under the Societies Act, cooperative society registered under the Cooperative Society Act, any body corporate, it has the same meaning as per section 2 clause 11 of the Companies Act 2013, means a company and LLP, okay, including a foreign company. So any body corporate. Next, a partnership firm, whether registered or not, only with respect to partnership firm I am saying registered or not. Why? Because registration of partnership firm under Indian Partnership Act 1932 is not mandatory. Next, casual taxable person who is a registered person, and last, any registered person under GST. So if you try to apply basic logic, that apart from these people, who is left person is unregistered individual. Unregistered means not registered under GST, unregistered individual. So for example, tomorrow I'm a person, I'm a normal employee, I'm a normal student, I'm a normal person who is not linked in any kind of these clauses. I'm not registered, I'm not a company, I'm not a firm, I'm not a society, and I take GTA service, that is exempt. Yes, are you getting it? Now I'm linking the RCM point, please pay attention. If the recipient is these people, that is the specified recipients, then we have just now covered that the GST will be applicable, not exempt, plus RCM will be applicable. So see, with respect to these specified recipient, the GST is not exempt, plus the tax will be payable under RCM. Now you can read this particular point under chapter number 2. Pay attention. GTA is providing the GTA service to specified recipient. Specified recipient I have just now covered. Specified recipient I have just now covered. I will give you a brief review again. GTA is the provider of the service, right? Recipient is specified recipient, registered factory, registered society, registered cooperative society, body corporate, registered or unregistered partnership firm, registered casual taxable person, or any other person registered under GST. So who is left? Unregistered individual. Unregistered individual is left. Now in that case, the tax will be applicable, that I have covered in chapter number 4, and here I have covered that those specified recipients will be liable to pay the tax under RCM mechanism. Sir, what if in this case only? What if in this particular case they are the recipient, but let's say the item which is being transported is, let's say, agriculture produce or organic manure, then we will claim exemption under this particular clause. You have to see. That's why I said that please apply structured thinking. First check any of the exemption clauses is applicable or not. Then you apply the RCM FCM logic. Is this clear? Yes. And always pay attention when the question will give you. I have just given a sample question here, not a very difficult one. Let's say here the consignor and consignee are given in your question. Goods transported are given. You always have to pay attention to who is liable to pay the freight. I don't care who is the consignor and consignee of goods which is being transported. I do care about who is liable to pay the freight. The person liable to pay the freight will be the recipient of the GTA service. So whatever logic I applied here, that is applicable with respect to recipient. So see my marking, I have written the person who is liable to pay the freight. I don't care whether he is a consignor or consignee. I will see who is liable to pay the freight, and then I will analyze his structure. Then I will see whether exemption is applicable or not. Then I will apply the RCM FCM logic. If you want, you can just quickly you can pause the video and you can cover this particular table. This table is absolutely easy. I will just cover 1 or 2 entries for your understanding. These kind of things we cover in the class more. A Limited, let's say, is an unregistered person consigner. Golu is a registered person consignee. The goods being transported is TV. Why this is important? Because we have an exemption entry with respect to goods. Who is liable to pay the freight? Golu. Is Golu registered person? Yes. Means he's a specified recipient. Means the tax will be applicable and under RCM. So Golu will pay the tax under 5% RCM. Now the rates also I will cover with respect to the GTA. The rates also I will cover with respect to GTA. Very, very simple. If the GTA, okay, let's do one thing. First I will cover the RCM provision, then I will cover the rate. Now let's talk about the two cases of non-applicability of RCM. Now when I say non-applicability, here it does not say it will be exempt. Exemption we will have to apply chapter number 4 only. When I say RCM is not applicable, the basic meaning is forward charge mechanism will be applicable. Now first, when the recipient of GTA services, department, local authority or governmental agencies which have taken GST registration only and only for the purpose of tax deduction. Now link this with chapter number 4. If the recipient are these people, most of the cases, the chapter number 4, this entry will apply and the GTA, the service will not be under taxation only. The service will not be under taxation only. So GST will not be applicable. So when I say not RCM is not applicable, FCM may be applicable, but in this case specifically it will be exempt only. So we will not come to the analysis of RCM, FCM if these are the people whom the GST is exempt itself, only for this particular A entry, right? I'm repeating, please understand. A part says that if the recipients are registered only for the purpose of TDS and they are not making any taxable supply. Now because they are technically registered, they will fall here that they are registered, so they should pay tax under RCM. But that question will be only if GST is applicable at the first place. That if recipient are these people, then the GST will not be applicable at the first place. Question of RCM, FCM, we will not reach till that level of answering the question of RCM, FCM. Yes. Now B entry. B entry is that where the RCM will not be applicable is where the GTA is going in the option of exercising forward charge mechanism. So GTA has an option. He can say that I don't want the benefit of RCM. I want to go under forward charge mechanism. Sir, why will he go? That is his decision. Right? He wants to have a better control over his taxation, and there is also link to what the rates will be applicable. Now I will tell you that rate, that if the GTA wants to charge 12%, basically if he wants to take ITC, he has to charge 12% under the forward charge mechanism. So he will see whether ITC, whether ITC taking is beneficial for him or not. What happens is that for a GTA, the major expense becomes of the petrol, and that petrol is not in the scope of GST. So ITC amount may not be very high. So that is his call. If he wants ITC, he will have to go under the 12% rate and he will have to go under the forward charge mechanism. Otherwise in RCM, the 5% rate will apply and obviously is not going to get any kind of ITC for his inward supplies. Correct? So this particular clause says, the part number B, that GTA can exercise the option of going under forward charge mechanism. If he does that, then he will have to issue a tax invoice, plus he will have to declare it in the invoice that I have opted for this option of forward charge mechanism, so that the recipient doesn't have to comply with the RCM. Now coming with respect to rates, the simple mechanism you have to understand with respect to the rates of GST, that if the GTA is going under forward charge mechanism, he has two options. Either he can charge 12% of the tax rate if he wants ITC. In that case, he is going to get whatever ITC is available with respect to his inward supplies. That's his personal decision. He will take sitting, he will sit with his CA and take this decision. And if the rate is 5%, he wants to go for the 5% rate. He wants to keep the cost low. Then okay, then fine. Then he is not going to get any ITC for his inward supply. And if the taxation is happening under RCM, so that specified recipient is going to pay the tax under RCM, the tax rate will be 5%. Apart from that, whatever the tax rate applies, whatever this ITC this yes or no I have written, that is with respect to GTA. If the tax is levied, on the GTA, then whether in FCM or RCM, the recipient is going to claim the ITC. If under forward charge mechanism the GTA is applying, then also recipient is going to claim the ITC. If the recipient is paying tax under the reverse charge mechanism, then also after paying he is going to claim the ITC on the basis of self-issued invoice. Is this clear? Yes. Okay. Now I think I can move ahead. Okay. Now advocate services and arbitral tribunal, very, very important. First we will understand what is the legal provision with respect to the exemption of advocate services. Yes. Pay attention. Very important. See, legal services, we are going to divide the discussion into two parts. One, when the supplier is an arbitral tribunal and the senior advocate, and second, apart from senior advocate, so we can call him for our discussion junior advocate and a firm of advocate, right? So let's talk about arbitral tribunal and senior advocate. Now arbitral tribunal is not like a normal tribunal like a company law tribunal. There is an inherent difference. This this kind of a doubt crops up. Why? Because with respect to the tribunal, we have covered schedule number 3, that is not a supply. Then the question comes that if it is not a supply, then why are we analyzing exemption? So understand, arbitral tribunal services can be taxable subject to this exemption that we are talking about. Arbitral tribunal exists as a result of agreement between the parties that do go under arbitration. So this is not the company law tribunal that we are talking about or a consumer tribunal that we are talking about. No. Okay. So this arbitral tribunal is not covered under schedule number 3. Now pay attention. Arbitral tribunal. The arbitral tribunal can be either a sole person or a panel of tribunal. I don't care. Arbitral tribunal is providing services to whom? 3 types of people. First, non-business entity. See, in general, the business entity means any person, individual, company, firm doing any kind of business. So first case, the recipient is non-business entity. Second case, I'm going to call this a small business entity. This is not a legal word. So for understanding, we can use, you cannot write this in exam. What is the understanding of the small business entity? That the turnover of the preceding financial year does not exceed the threshold, right? And third is with respect to government. Government means central government, state government, local authority, union territory, governmental authority and governmental entity. What is governmental authority? What is governmental entity? I will cover in chapter 4. Too much discussion I don't want to mix from chapter 4 here. Just understand that 3 people are, if they are recipient of these services of arbitration, then the exemption will be there. If it is not the case, so who is left out of this? If I'm excluding these 3, which kind of recipient is left? A big business entity, means the turnover is more than the threshold. In that case, RCM is going to apply. In that case, tax will be applicable under reverse charge mechanism. Now, with respect to senior advocate, if senior advocate is giving services again to these 3 people, then the tax will be exempt. And now who is left apart from these 3? The big business entities, means the turnover of last year is more than the threshold. In that case, RCM is going to apply. One important point to be noted, whenever I'm talking about services by senior advocate or a firm of advocate or a general junior advocate, please ensure that the services are legal services. So what are legal services? Any advice, any consultation, any representation with respect to any branch of law. Family law, constitution law, tax law, it can be anything. So question may try to confuse you tomorrow that a senior advocate is giving the service of his family business. That is not covered under RCM because that is not a legal service. Okay. Now, what is the meaning of senior advocate? Senior advocate means as designated by the High Court, Supreme Court. So I cannot go tomorrow and let's say I'm an advocate. I cannot say that I'm a senior advocate, I have a lot of experience. No, it needs to be a designation by the High Court or Supreme Court, and the question will specify that. Now, when I talk about partnership firm of advocate or individual advocate apart from senior advocate, for discussion we can call them a junior advocate. So we are basically dividing the discussion into 3 types of legal people: senior advocate, junior advocate and a firm of advocates. Correct? Senior advocate I have covered above, but for partnership firm and a junior advocate I am covering below. Now what is the difference between this and this? There is one additional entry when I talk about this second case. First 3 are absolutely same, the list that I have covered above, but one is additional entry. What is that additional entry? People from the same industry, from this particular industry, that is recipient is an advocate or a firm of advocates. So understand one thing, when a senior advocate is giving services to a firm or advocate, that is not exempt, because had that been exempt, then this kind of an entry would have been given here also. That is not the case. So here, if a senior advocate is giving services to a firm or advocate, that is not exempt, tax is applicable. Yes, now I'm linking the RCM point. Pay attention. Advocate and arbitral tribunal. First, arbitral tribunal giving services to any business entity. Now I have made a noting that this is a big business entity, means the last year turnover is more than threshold. How come I can make this noting? Because if the last year turnover is less than threshold, if it is not more than threshold, it is less than threshold, then in any case the service is exempt. The question of RCM, FCM will not come. So RCM will be applicable only when it is a big business entity. Now coming with respect to advocate, first let's talk about a firm of advocate. Firm of advocate, if it is giving legal services to a big business entity. Why are you saying big business entity? Why have I made this noting below? Because if it is a small business entity, then the legal service is exempt. Same discussion goes for advocate, including a senior advocate. Right? Now one very specific interpretation we can draw from here. One possible alternate point of view we can draw from here, that if a senior advocate is giving services to a firm or advocate, we just now saw it is not exempt, and that is also not written here. If The intention would have been to provide RCM when the senior advocate is providing services to a firm or normal advocate. It could have been stated here, like in exemption chapter, they have stated this and this separately. So business entity word they have used separately, advocate they are using separately. So can I conclude that senior advocate giving legal services to firm or advocate which is not exempt, because it is this particular entry is not given here, that will be under forward charge mechanism and not RCM? It is possible. It is possible to conclude. But here there is another point of view. That, sir, can't we conclude this firm or advocate as a business entity and see his turnover? If it is lower, then we can still give the benefit of RCM rather than forward charge mechanism. Yes, that is also possible. We don't have any clear instruction from ICI. In my opinion, if the law is giving these words separately, then in the chapter number 2 also, below business entity, they should have given with respect to senior advocate giving services to firm or advocate. I hope this is clear. Yes. Now going to next, sponsorship. With respect to sponsorship, there exists an exemption entry with respect to certain sports, but that is not a very big analytical entry, unlike our GTA and legal. So I'm not covering it right now. Just understand what is the meaning of sponsorship. You come to me that you say that, sir, in our local society, in our community, let's say we are having a cricket match, so please pay us 5 lakh rupees so that we can incur the expenditure, and in return all the boundaries they will have name of your S1 classes. So you are providing me sponsorship service, I am the recipient and I am paying you for that. Okay, you are the supplier, I am the recipient. In sponsorship services, sometimes a mistake happens in identification of the supplier and the recipient. So please don't commit a silly mistake. Simple words, recipient means the person who is paying an amount. Supplier means the person who is receiving an amount. Okay, so in case of sponsorship, the RCM applies regardless of the supplier status, provided recipient is body, corporate or firm. So if the recipient is a company, LLP or a partnership firm, you don't see the status of supplier, you apply RCM. Clear? Don't see this point. This is for November 25 students, or we can say now the later November and some January students. Okay, so this is not relevant for you. Okay, next. Government services I will be covering along with chapter 4, because there is a very detailed chart that I link chapter 4 and chapter number 2. Only for government I'm leaving, otherwise all the exemptions I'm covering here along with chapter number 2 only. Now let's talk about property on rent. Again, this property on rent that I'm talking about, I had covered one GST short which is available on the video, on the YouTube video, plus the notes I have circulated on the Telegram channel. Ensure you're seeing that this chart is from that notes only. Immovable property is a very area of confusion. Now obviously this is a revision lecture, so I'm not going to study all the entries in detail. I will give you the revisionary chart directly here. Understand this. If you have any query, please comment, I will reply. So if an immovable property is given on rent, always see which is the type of property, residential or commercial. There exist certain exemptions in residential property, not commercial property. Shop, mall, government is not going to give any kind of exemption per se on commercial property. In residential property, see which type of residential property. If it is other than a PG hostel student accommodation, or it is a student PG camps hostel accommodation, because this was the difference created from May 25. So if it is other than PG hostel, so let's say I'm giving my flat on rent to a family is coming in and it is for residential purpose. So please pay attention. Two conditions I have stated. First, residential property. Second, residential purpose. Okay. And if it is to an unregistered person, let's say the person is working somewhere, he is living there with his family. So three conditions complied: residential dwelling, residential purpose, to unregistered person, GST will be exempt. Sir, if the recipient is registered, then can we sure shot say that exemption will not apply? No. One case still the exemption may apply if that person is registered but in the capacity of sole proprietor, and he's taking that flat for his own residential purpose. He's not doing business from there. He's going to pay that, he's going to take that, flat on the rent on own account, not the business account. Then okay, that is also fine. We will exempt it. But if it is any other case, for example, a bank, HDFC Bank has taken a flat on rent for the purpose of stay of its employees. So bank is a registered person and it is not a sole proprietor. So in that case, tax will be applicable and RCM will be applicable. Okay. Sir, who is the supplier here? Means who is the landlord? does not matter. Supplier status is irrelevant. And if it is a case of residential dwelling but in the nature of PG, hostel, student accommodation, you have to check twin condition test. What is the twin condition test? That minimum for 90 days you are giving that flat on accommodation to the students or PG or hostel that you are running. And second, from one person per month, you are not earning more than 20,000. So it is up to 20,000 PPPM, means per person per month. Okay, if these both conditions are complied with, your GST will be exempt. But if not, then GST will be applicable provided the supplier is registered under GST. Supplier is registered means his turnover is more than threshold, or maybe is a voluntary registered person. Then he will issue a tax invoice and he will charge GST from you. Is this clear? Okay. So here FCM will apply provided supplier is registered. So basically we will say that exemption is not going to apply, but actual taxation will depend on the supplier status, whether he is falling under the GST mechanism or not. But we are not going to give any exemption. So let's say tomorrow his turnover crosses 20 lakhs. Yes, GST will be applicable under forward charge mechanism, not RCM. RCM applies, I will cover that. RCM applies when the recipient is registered, right? Here, like here. One important point to be noted. Discussion of RCM and FCM depends only upon the factor which is the basis of discussion of RCM FCM is only the type of property, if it is residential or commercial. It does not matter what is the purpose. When I talk about RCM FCM question, the purpose is relevant for chapter number 4 exemption. Is this clear? Now, when I talk about commercial property, no exemption. So, two exemption entries that we study, entry number 12 and entry number 12A. Entry number 12 was with respect to this and entry number 12A was with respect to this. These are not applicable. So, you apply the normal logic with just one focus on the RCM entry. If the person is registered, supplier registered, recipient unregistered, forward charge mechanism. Supplier status matters in commercial property because there is one RCM entry. When the supplier is unregistered and the recipient is registered. But in residential, in exemption, don't see who is the person who is lending, basically who is the landowner, the landlord. You don't have to see. Only in commercial property you have to see. So registered to unregistered will be under forward charge mechanism, registered to registered also under forward charge mechanism. But if supplier is unregistered and the recipient is registered, RCM. Now this is very bad in law. Why? Imagine I am a shop owner, commercial property, my total rent from you and my total rental income of this business is only 2 lakhs. So it is not crossing 20 lakhs, but you are registered. So government is asking you to pay tax. This is not right. But government doesn't want to leave any revenue with respect to commercial property rent. Third, important, very logical but important, students commit mistake. Unregistered to unregistered exempt. Why? Because see, supplier cannot charge because he is unregistered. Supplier is not in the position to charge, his turnover is not crossing the limit, so he is unregistered and you are also unregistered. So why the government will tell you to pay tax under RCM? How it will say? You are unregistered, right? So you are also not required to pay tax. I am also not required to pay tax. RCM is also not applicable, so you will be exempt. The tax will be exempt, GST not applicable. Clear? I think this particular analysis will clear a lot of points. Again, I have covered one example here. I will cover some of the parts here. For residential dwelling, let's say, see, for residential dwelling, the landlord status does not matter. Just see who is the tenant. If tenant is unregistered and uses residential for residential dwelling, GST is not applicable. If the tenant is registered and he is using for commercial purpose, regardless of being a sole proprietor, commercial purpose, we will always tax. So for example, flat is being given on rent to a CA in practice who is registered. He is using for his employees. The employees come and sit there. He's running a practice, so that will be taxable. If the tenant is registered and he is sole proprietor using for personal purposes, then GST will not be applicable. And if it is a bank using for its employees, the bank is a registered person, not a sole proprietor, no exemption. GST will be applicable under RCM. Now let's see the 3 examples with respect to that PG or student accommodation or hostel or camps. So here on some level the supplier status will matter. If the supplier, that is the landlord, is registered or unregistered and recipient is unregistered. Now pay attention, in these cases the recipient will be unregistered only because we are talking about students who are coming on PG. So they will be unregistered only. Supplier registered or unregistered, recipient unregistered, if those 2 conditions are complied, then GST is not applicable. Question of RCM, FCM will not come. Supplier registered, recipient unregistered. Supplier registered means his turnover is crossing, or maybe he is under the voluntary registration scheme. and two conditions are not complied. So now GST will be applicable under FCM. So apply logic also. Yes, supplier unregistered, turnover is not very high. Recipient obviously unregistered. Two conditions are not complied. It means that we are not going to give the exemption. But if GST is applicable or not, that question will depend on the supplier status also, no? See, exemption is only to tell you whether we are exempting this or not. Actual GST further will be applicable if the person is crossing the limit. So here it is not crossing. Unregistered to unregistered, GST is not applicable. For commercial property, you don't have to see any kind of a purpose or anything. There is no exemption. Okay, and obviously shop or a commercial property is not going to be used for living purposes. Registered to registered, FCM. Registered to unregistered, FCM. Unregistered to unregistered, exempt. Because RCM applies when it is unregistered to registered. So here if recipient becomes unregistered, supplier is also a small person, not the turnover is not crossing, then not applicable. The RCM, FCM is a secondary question. The GST is not applicable at the first place. Is this clear? And if unregistered to registered, RCM. Now this is bad in law. Government is now playing in a very different manner. Why? Because actually the supplier status is unregistered. He is not a very big level player. So turnover is not crossing. Just because recipient happens to be registered, you are charging GST. Just because it is convenient for you, you are charging GST. One example, pay attention. Residential flat rented to A Limited, which is unregistered for its employee stay. This will be exempt. Why? Apply the logic. Residential flat, residential purpose, employee stay, and the person is unregistered. It is nowhere written that the person who is the recipient is using for residential purpose of itself. If that would have been case, a company and obviously its employees, those will be separate persons. Clear? But if A Limited becomes registered, then if recipient is registered in residential dwelling, exemption is only for sole proprietor. Tax will be applicable. I know this seems to be very confusing, daunting, very, very daunting, but go through these notes once. It is available on my Telegram. Make your own notes, make the chart again, listen to this particular part again, this particular segment of the renting, and I'm sure you will be clear with the concept. Yes. Now let's proceed to next. One is a specific with respect to TDR FSI lease. I will just give you a brief of it. This will be covered again in the chapter number 4 and not a very big detailed exemption. So what is TDR FSI? Transferable Development Rights Floor Space Index. This is given by a person who is the owner of a property to a developer. Developer takes this and builds the building. Okay, he builds a flat, he constructs the flat. Now, if that flat or whatever that property is being built, if that is sold before the completion, means GST will be applicable. That will be a construction of service. In that case, GST is applicable and government will get its own share of GST on that. If that happens, then this transfer will be exempt. If that is not exempt, means the person, the DLF, let's say here the DLF is the promoter who is taking this particular FSI, TDR from the person, from any person, and building something. Is building flats. And if that is not sold, before the completion, means GST will not be applicable. Government is not going to get the GST. So in that case, this transfer will become taxable, but not the entire amount. 5% or 1% becomes taxable. 1% in case of affordable scheme housing and 5% in case of non-affordable, so luxurious, and that will be given in the question. And if it is taxable, whatever the GST portion is on that 1% and 5%, promoter will pay under RCM. Okay, this can be also lease transfer, lease of long term, 30 years or more. So you just have to pay attention on these things. Director services, whichever are in the official capacity, not personal capacity, official capacity, they are taxable under RCM. So sitting fees, RCM. Salary, not covered, schedule 3. Okay, independent director, as you remember under chapter number 1, independent director will always be under GST. Independent director can never be an employee. Clear? Okay. Next, insurance agent. Now, insurance agent is giving service to any insurance company. It will pay tax under RCM. Recovery agent giving services to people who give loans. Now, bank, NBFC, or a financial institution. Okay. So these three people are only covered here. Here the tax will be applicable under reverse charge mechanism. Tomorrow question will say that recovery agent service. Recovery agent are those people who go and they threaten the defaulters to pay the loan. So tomorrow, if a recovery agent service is being given to a trader of the goods whose money is stuck, in that case the RCM is not going to apply, because we are talking only about bank, financial institution, or NBFC. So if this is given to a trader or any businessman, normal businessman, in that case, RCM will not apply, forward charge mechanism will apply. Now with respect to music industry, he is Anu Malik, a very known artist in Bollywood. Okay, I think you guys must also be knowing him. So you can take any example. These persons are copyright owners of original drama, musical, artistic work. So music composer, photographer, artist, or like, so these are the creative industry people. They are owning copyright. They transfer this copyright to a music company or a music producer or any other similar person which are located in taxable territory being India, because maybe they want to make a remake of this music. In that case, this service of transfer is also taxable under reverse charge mechanism. Same thing goes with respect to author who have copyrights with respect to their original literary work, original musical work. This is a technical term under IPR. We don't have to study. Okay. Now this is also covered under RCM when given to a publisher which is located in India. Now, sir, why have we classified this and this separately? Because in case of author, there is an option that the author can go under forward charge mechanism. He will provide this declaration on the invoice. He will charge a tax invoice and pay tax under forward charge mechanism. So this is just like GTA, with one minor difference being that in case of author, there is one lock-in period, that if he exercises the option of forward charge mechanism for next 1 year, he cannot withdraw that option. He cannot go under RCM. Is this clear? Okay. Services to RBI. So there is an overseeing committee. Whatever services are being given to RBI, RBI pays fees to the people of that overseeing committee. Tax will be paid under RCM by the RBI. Direct selling agent, the RCM applies only when the person giving is individual. Recovery agent, insurance agent, they can be individual or other than individual. Let's say company is providing the recovery services through its own people. That is also covered there. But here specifically the law says individual selling agent, if giving services to a banking company or NBFC company, then it will be taxable under RCM. This individual selling agent, the DSA, they are also kind of a people. See, direct selling agent, BF and BC, this is business correspondent and business facilitator. These people are involved basically in extension of the business. So they help you to grow the business. So in DSA, the RCM will be applicable only and only when the person is individual and the recipient is a bank or NBFC located in the taxable territory. Is this clear? Okay, so next concept is with respect to the BF and BC, that is the business facilitator and the business correspondent. So first, let's try to understand the exemption area, right? So I will just tell you, I'm not showing the notes here, or just let me see if the notes are easily available for the BF, BC also in the chapter itself. I will show you that. Wait a minute. Just a minute, just 1 minute. Yeah, so it's available. Now understand that with respect to the rural area, what are BF and BCs? Basically, these are the business facilitators and the business correspondents to help grow the business of banking companies and insurance companies, right? They operate in the context of rural areas as well and the urban areas as well. But as the name suggests, apply your feel factor, apply your logic. The government will try to give exemption only with respect to rural areas because we need more penetration of banking and insurance products in the rural areas, right? On the contrary to the urban areas. So they operate both in the both places, but exemptions exist with respect to rural area. Now with respect to the banking industry, the services of BF and BC are exempt, including any services by agent or intermediary of the BFBC. So if BFBC is providing any service to a banking company, that is also exempt. And if any intermediary or agent which is providing services to BFBC, who in turn is providing services to a banking company, that is also exempt. But when I compare this to an insurance sector, the insurance sector rural area exemption only lies till this point. The intermediary and agent services are taxable. Is this clear? Now I will slowly link this to the this RCM FCM provision, right? Because first we have to understand the exemption and then we have to see the concept of who is going to pay the GST, right? So understand one field factor point of view, that business correspondent is more involved in the business. He has more responsibilities. So we are going to put the GST liability, the liability of paying GST on the BC. That is the business correspondent, but we will give exemption to a BF, that is the business facilitator. Is this clear? So now link this. If this is with respect to rural area, this is exempt. But if it is not exempt, so if it is not a rural area, means it is an urban area. For urban area, we are not going to give exemption. Now the question comes in that who is going to pay the GST? As just now I told you, if it is a business correspondent, we will apply FCM because he is more actively involved in the business. He is doing a proper business just like any other, any other person. So he is going to pay the tax. We are not going to give any benefit of RCM there. But if it is a case of business facilitator, then we will say, okay, BF, you're not involved in the business that much. Let's give you the exemption from, this procedural compliances. Let's put you under RCM. So the bank will pay the tax. Is this clear? Is this clear? Now, when I compare this with the intermediary and or agent to a BFBC. So if an intermediary or agent is providing services to a BFBC with respect to the banking industry, and if it is a rural area, exempt. If it is an urban area, apply the same logic. If providing to a BC, we will ask RCM. Why? Because BC is involved in the business, let him pay tax, let's exempt the intermediary agent. But if he is providing services to a BF with respect to urban area where tax is applicable, now he is also a small person, he is also a small person. So whom to give benefit? No one. So normal FCM will apply. So with that in mind, now compared to the insurance sector, the rural area, this exemption will apply, but not with respect to intermediary and agent. One more important point to be noted, BF2 banking companies under RCM, but the word used is only and only RCM. Word used is only and only banking company, not insurance company. So BF2 insurance company with respect to urban area will come under forward charge mechanism, because here they are stating only banking company, not insurance company. But agent of BC to a BC, regardless of banking or insurance, we will cover under RCM. I know this becomes a little bit confusing, but in the revision manner, in the revision video, I have tried my level best to cover everything. I will still cover one short example. See, I had made a summary example. Rural area, we are going to exempt everything. Except in case of insurance sector, that to agent or intermediary. Because in insurance sector, I told you the exemption exists only till the level of BFBC to that insurance company. And in that case, RCM will apply or FCM? FCM will apply. Why? Because just now I told you, with respect to the BF, the services are under RCM only when provided to a banking company. And here it is an insurance company. But when I compare to urban area, this is very important for you to understand, pay attention. If BC is providing services to a bank, I just now told you the field factor, BC can pay tax, so FCM. If BC is providing to an insurance, BC can pay tax, FCM. If agent of BC to BC, then BC is liable to pay tax, so let's leave agent, RCM. Business facilitated through bank, we have already covered this, right? That is with respect to RCM. Why? Because BF is a small person, not BC. Now, BF to insurance, we are covering this under forward charge mechanism, not under RCM. Why? Because specifically the chapter states only banking company, not insurance. This is very important to understand. This is very, very important to note for your exam. Apart from that, agent of BF to BF, we apply the same logic, forward charge mechanism. Both are small people, so let the normal provisions apply. I hope BFBC is clear. Yes. Now, security services will be covered under RCM when the supplier is any person other than body corporate. So anyone other than company or LLP. So it can be a partnership from individual HUF. If he is providing services to a registered person, then it will come under RCM, except in two cases. Case number one, if this registered person is the governmental department agencies which are registered technically, but only for the purpose of TDS compliance. They are not making any kind of taxable supply. And second, composition scheme. So composition scheme is also type of a registration only, but the entire benefit, the entire purpose, the entire aim and mission of composition scheme is to give him some benefit from compliances. So here they are giving this benefit that okay, if you are a composition registered, then you will not be covered under RCM. Then what will apply? Forward charge mechanism. Okay, this composition scheme benefit that is being registered but excluded, this does not apply with respect to the GTA. Okay, if composition scheme registered person receives GTA service, he will be covered under the RCM, right? The third, they have given unregistered. So in your book, you might find unregistered person, but that is not very logical. That is not required to be stated otherwise, because we have already covered that registered person is going to pay. So obviously unregistered RCM won't apply. Now, motor vehicle on rent. Before starting with this, first understand there is a difference between motor vehicle on rent and service of transportation of passenger. So in service of transportation of passenger, I have my schedule, I have my time, mapped out that what will be the time of transportation, at what point I'm going to pick you up, and the time and route is everything decided. But motor vehicle on rent means now I'm giving this vehicle at your disposal. You decide what you want to do. The only condition for here RCM is that the cost of consideration will be including the cost of fuel. Okay, so you don't have to incur it otherwise. Now, three conditions apply with respect to RCM. If all three conditions are complied, RCM, otherwise forward charge mechanism. Who is the supplier? The owner of the vehicle. Who is the recipient of the service? The person who is taking the motor vehicle on rent, right? Check number one, condition number one, GST rate should be 5%. If I don't want to apply RCM, if I'm a supplier and I want to retain myself under FCM, then one of the reasons might be that I want to use 12% GST rate and I want to take all my ITC. With respect to motor vehicles, with respect to GTA, why this option exists of FCM, RCM and different rates is that the most important input here is the petrol diesel. which is outside the scope of GST. So that person who is the owner, the GTA, or the person who is giving motor vehicle on rent, they have to decide that how much expense is that, whether ITC is available or not, how much, what is the final conclusion they are drawing, that they want to take the 12% rate, or they want to let it go under RCM. Yes. So if they want ITC, they may go for 12% rate and they will retain themselves under the forward charge mechanism. So first condition here is RCM rate 5%. Second condition is that the supplier should be other than body corporate, because if he is a body corporate, then why to give benefit of RCM? Yes. And the third person is recipient should be body corporate, because we are going to ask him to comply with the RCM. Okay, so if I am let's say other than body corporate, the other person is also other than body corporate, then the government will not ask that small scale person to go under RCM compliances. Then government will ask me only to retain the FCM mechanism. Is this clear? So 3 checks we have to ensure. Lending of securities I have already covered under chapter number 1. The lending fees the borrower has to pay under RCM. With respect to the IGST, that is the import of services. So whatever services we covered above, they exist as it is with respect to IGST if the nature of transaction tomorrow happens to be inter. But one additional entry is import of service. So import of service, export of service, these basic definitions you should be thorough. Import of service means the supplier is outside India, recipient is in India, and place of supply is in India. So import of service, RCM will apply. I will pay tax under the reverse charge mechanism to the government of India. Is this clear? But there is one exception with respect to non-taxable online recipient. What is non-taxable online recipient? Non-taxable online recipient means an unregistered person under GST who is receiving OIDAR service. You are a student, okay? One fine evening, you were reading an ebook, you liked it, you purchased it from a UK publisher. You paid £10. You are a NTOR. Now, do you think that does it make sense here if the government asks you to go under the reverse charge mechanism? Because technically you went for the import of service. You are in India, supplier is outside India. Place of supply section 1312 for OIDAR will fall under India. But does it make sense to ask you to go under reverse charge mechanism? Absolutely not. So there is an exception here, that excluding the NTOR. Then what will apply with respect to the NTOR? Forward charge mechanism. That we cover with respect to OIDAR. Okay, so if a supplier of OIDAR is outside India and the recipient is non-taxable online recipient, forward charge mechanism applies, and that person is required to be mandatorily registered in India. We cover this under section 24 as well, chapter number 8, mandatory registration. Are you able to get it? See, this is a revision class, so I'm expecting you to know all the provisions, and then I'm here to interlink and plug everything together, right? But still I'm trying my level best to cover each and everything. Now, there was one small circular with respect to the GST on airport dues. This is nothing big. Just understand one thing. When I go to Delhi airport, I use the Delhi airport services. I use their infrastructure. So the airport operator, let's say there is a GMR company which I think operates the Delhi airport. Now it will charge 2 particular fees from me, that is the UDF, user development fee, and PSF, passenger service fee. I have to pay as a passenger, they are levying as an operator. But practically it is very difficult for the airport operator to collect it from me. Imagine someone standing at the gate and asking you 30, 40, 50 rupees for this UDF and PSF. It will be very bizarre like condition. So what happens is that the airport operator asks all the airlines who are selling the tickets to passengers to levy this UDF and PSF, to levy, not levy actually, to collect on their behalf. So here the concept of pure agent rule 33 chapter 6 kicks in. So let's say I'm traveling by Vistara. By buying the ticket, I'm also going to pay 60-70 rupees in the name of PSF and the UDF that is actually been levied by the airport operator. The Vistara is collecting only and only as the pure agent. So this service is not being levied by Vistara. This is levied by the airport operator. And Vistara is just collecting in between as a pure agent, and it is going to pay back to the airport operator. So who is supplier? Airport operator. Who is recipient? Me as the passenger. Can I take ITC? Yes, provided all my basic conditions are complied with. Who is going to declare the GST on that and pay the returns for that amount? Airport operator. Here, that is the only thing you need to know, nothing else. Now certain points with respect to RCM. If a supplier is engaged only in RCM supplies, he is not making even ₹1 supply with respect to forward charge mechanism, then he is not required to be registered under GST section number 23 chapter number 8. If my supplies are under RCM, can I take ITC? Answer is no. That part is considered as exempt supply and I'm not eligible to get any ITC. Apply logic as well. What will I do of ITC if I'm not going to pay any liability? Okay, next. If a person is liable to pay tax under RCM, so I'm a GTA, you are a specified recipient, I give you supply of 10,000 rupees on which 5% you are required to pay. RCM, and let's say your own turnover is hardly 1 lakh rupees, so you were otherwise not eligible to be registered, but now because of the RCM liability you are required to be mandatorily registered under section number 24. Recipient can take ITC, so understand, you whatever you will pay, let's say in the same example, the tax you will pay, you will take the ITC of that. Okay, you are going to take the ITC. Why? Because this is an inward supply for you. So if I'm a recipient of RCM supply, I'm going to pay the tax, but I'm going to take the ITC as well, right? And I will do the self invoicing, which is covered under section 31, tax invoices. Okay, one more thing, that RCM liability that I'm going to pay, I need to pay in cash. Why cannot I use my ITC? Because ITC is used for output tax. This is not my output tax, this is your output tax that I am paying under RCM. So I have to pay it in cash, and after that I will use, I can take the ITC for that particular tax that I paid. But the original payment I'm making in my GST 3B, that needs to be paid in cash, not ITC. Now the next concept comes of section number 10. Now understand, I will clarify this very simply. Section number 10 is covered as a composition levy. Why composition levy? There are some benefits. You just have to, what you have to do, you do not have to calculate your output tax. You cannot charge output tax. You cannot take ITC. One simple thing you have to do, just maintain your details and record of your turnover, and you pay 1%. I will give you the percentages. You pay certain specified percentages of your turnover, that will be known as composition levy, and that will form part of your cost, and you pay it to the government. So simplified, everything will be simplified. You don't have to file GSTR 1 and 3B. You just have to pay tax quarterly, so 4 payments in a year, and 1 annual statement, that is GSTR 4, which is to be filed till 30th of June. Earlier it used to be 30th April, but now it is 30th of June. Okay, now the composition scheme is divided into 2 parts. One is 10 subsection 1 and 10 subsection 2. 10 subsection 2 is nothing else, it is conditions attached to 10.1, and 1 is section 10 subsection 2A. 10.1 is with respect to goods and restaurant services. Section 10 subsection 2A exists with respect to normal services apart from restaurant, example barber, example plumber, example chartered accountant. So all those services under composition scheme apply under section 10 subsection 2A. Is this clear? Now let's quickly cover the basic, that if you want, first of all, we are not going to force you. If you want, you can opt to go under composition scheme instead of the normal scheme. Okay, composition is also type of a registration only. It is a type of a GST registration, but one is a regular scheme, one is a composition scheme. Under section 10 subsection 1, 3 rates exist. With respect to goods, if you are a manufacturer, you will pay 1% of turnover in a state, not aggregate turnover. If you are a trader, you will pay 1% of taxable turnover in a state, not exempt supplies. So in question, always pay attention whether you are a trader or you are a manufacturer. Okay, with respect to manufacturer, there are certain goods which are not allowed to manufacture. So that list I will cover in a couple of minutes. So if you're manufacturing that, you cannot be covered under composition scheme. What is the logic behind that? There are those particular industries like tobacco and all those things, factory bricks. So those particular things, there are high chances of tax evasion and very high tax revenue collection. So government says no composition scheme for that. Is it clear? Now, with respect to the restaurant services, the rate is 5%. The rate is 5% of turnover in a state. So only for trader you have to see taxable, otherwise turnover in a state for for the manufacturer and for the purpose of the restaurant services. Now pay attention, the 5% you always have to show in the bracket 2.5 2.5 or 1% as 0.5 and 0.5. Why? Because it will always be an intrastate supply. In composition, there will never be a case of interstate supply because it is not allowed. I will cover that in the conditions. Basics are clear. Now one very important provision is that with respect to marginal services allowed. So in section number 10 subsection 1, apart from the restaurant services, let's say you are doing goods, okay, you are trading or manufacturing goods, but you want to give some services, let's say some warranty related, some repair service. It happens, right? If I'm a dealer of goods but I provide repair services, or I earn some interest discount income, so these kind of issues happen. Now there is this second proviso to section number 10 subsection 1 which allows that person to have marginal services. Marginal means unlimited. Now what is that limit? 10% of the preceding financial year's turnover in state, or 5 lakh, whichever is higher. And this turnover in a state figure does not include interest or discount. You don't have to cover interest or discount in that. Okay, so let's say my previous year turnover was 10 lakh. So 10 lakhs 10% is 1 lakh, 1 lakh or 5 lakh, whichever is higher. In current year, in composition scheme, in goods section 10.1, I can provide 5 lakh up to 5 lakh rupees of services. Here, yes, I have covered each and everything on this same page. If you want, you can review this part again because I have stated all the points logically. Now, 10.2 talks about the conditions with respect to 10.1. Sub clause number A, it says that save as otherwise provided in subsection 1, that is the marginal services limit. Apart from that, you are not allowed to do any kind of services, because if you are doing services, then 10.2a or 10.1 confusion arises. So no services allowed except the one we have permitted. So marginal limit you can do, beyond that not possible. You should not be engaged in any supply of non-taxable services. Now non-taxable services do not exist. Only non-taxable goods exist. The 5 petroleum products and the alcoholic liquor for human consumption. Yes. Now otherwise, pay attention here. You should not be engaged in making any interstate supply of goods and services. If you are making interstate supply, so you are in one state, place of supply is another state, it means you are a big person, you are a big businessman, you are doing interstate supply. Why do you need composition scheme? Not allowed. Interstate purchases are allowed. Yes. Next, you should not be engaged in making any supply of services through an ECO which are covered under TCS. Now I will cover this in the ECO also. If possible, I will be making that in English as well, the TCS and the ECO chart. Okay. But you can pay attention here that you should not be engaged in making any services through ECO which is required to collect under TCS. But if you are making goods through ECO, you are allowed subject to certain conditions. That conditions will be covered in the TCS chapter. You are a manufacturer of goods, that is fine, but notified goods not allowed, that I covered above. I will be covering the list in a couple of minutes. You should not be CTP or NRTP. CTP and NRTP already are a specific types of registration, so they cannot again use composition scheme for that. Now with respect to the composition scheme for services, section 10.2a, I have covered the basics. Now 2 important things to understand, that the rate. Now one important thing, sorry, in 10.1 what is the limit? What is the limit of aggregate turnover? Eligibility 1.5 CR. 1.5 CR in the preceding financial year. If in the preceding financial year aggregate turnover is up to 1.5 CR, in current year you can go under the composition scheme. Fine. And in current year also you can stay till 1.5 CR. So suppose last year it was 70 lakhs. In current year you are allowed to go. In current year till 1.5 CR you can stay. If your turnover in this year crosses 1.5 CR, then it will lapse from the date crosses, and obviously next year you cannot go because your preceding year has crossed 1.5 CR. In special category states, now what are the special category states? I will tell you, that is 75 lakh limits. These are the states where the volume of business is low. So here there is a code word to learn, Suman drinking tea. Now Suman drinking tea means Suman is drinking tea. Yes, Suman is drinking tea and she is drinking it thrice. Once in Mizoram, once in Meghalaya and once in Manipur. This is a short mnemonic that we had learned in our class. So these states, Arunachal, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim and Tripura will be for the 75 lakhs. And when I talk about 10.2a limit, the composition scheme, the eligibility is 50 lakhs turnover. And this is still common for all the states. Clear? Eligibility test is same. Rate I have covered 6%. 6% means 3% and 3%. Eligibility is exactly, almost exactly same like above, that you should not be engaged in making any supply of goods or services. This is the differential point. Above, non-taxable service was covered. Here, non-taxable goods are covered as well. And non-taxable goods to exist, I have already told. No interstate supply allowed. No services through ECO allowed, which are covered under TCS. And notified goods should not be manufactured. CTP and NRTP should not be allowed under composition scheme. Now, one more important point to be focused upon. You are allowed under section 10 subsection 2a only if you are not eligible under section 10 subsection 1. Now, let's say I am a dealer of goods. I am providing services also which are under the marginal limit of second proviso to 10.1. So, legally, I am eligible under 10.1. Legally, I am eligible under section 10 subsection 1. Actually, I have not opted for 10.1 composition limit. Still, I cannot come under 10.2a. 10.2a does not say that you should not be registered under 10.1. The 10.2a says you should not be eligible for being registered under 10.1. This is a very important difference. Now, limits. Now, let's say I have 5 units all over India. Or either all 5 units will be under composition scheme or all 5 units should be under the regular scheme. It is not possible that some units are under regular and some units are under composition. Turnover criteria I have already told. Limit lapse I have already told. Composition scheme cannot, if you are registered under composition scheme, you are not going to charge tax. You cannot take ITC. For determining eligibility and for determining tax payable, this I will cover through one example for you. This I have already told reasons. This I have, okay. Now one important thing. The composition scheme section 10, it overrides the entire GST law except 9394, that is the RCM. So if I am registered under composition receiving RCM supplies, I have to comply with RCM. I will not be issuing tax invoice. I will be issuing bill of supply, and in that bill of supply plus my every place of business and additional place of business, I have to give a disclosure that I am under composition scheme. I cannot charge tax. So these are certain goods for which the composition scheme, manufacturing is not permitted. All these goods are those goods which your parents would have asked you to stay away from while you were growing up. Don't eat ice cream, you will catch cold. Okay, and any other edible ice. So in Hindi we have this word chuski, right? The flavored ice. So you don't have to eat that. No ice cream, whether or not containing coca flavor. Pan masala, tobacco, cigarette and tobacco, aerated waters, soda and drinks. And here bricks and you can learn bricks and tiles here. So we used to say na that, okay, please pay attention if any work is going on, so brick may fall on your head. So this is some short story that we had learned in our class, that tobacco, pan masala, drink, soda and edible ice cream and bricks and tiles. So just pay attention. You don't have to you have to stay away from these things. So that can be a code word, that can be a short story to ensure that you learn what all goods are not permitted under the manufacturing of composition scheme. Yes. So if you are coming to the GST, if you are applying for the GST registration, at that time you can opt for composition scheme provided you are eligible. But if you are already under the GST scheme, you're already registered, now you want to switch to the composition, you can switch from the next year. So by 31st March, whatever your year is going on, you have to file an intimation. If there is some circumstance which happens due to which you have to withdraw from the composition scheme, then within 7 days you have to file the intimation on the GST portal, notifying them that now I have shifted to my normal regular scheme because one of the conditions was not complied. Let's say I made an interstate supply or my turnover exceeded. Okay, now with respect to this, I just wanted to cover one example with you guys, very important example, which will also cover the explanation which is covered here. Okay, it is of your ICM material only. So understand one thing, very logical, but needs to be covered through example. So I will invest 5 more minutes. Let's say there is a new photographer. He has started his business. Photography is a service, so we are going to talk about 10-2A. Okay, I asked him to give me the details of turnover. So he started business from 1st April. So in the first quarter, April, May, June, he conducted his turnover was 20 lakhs. July, August, September, the turnover was 30 lakhs. And post that, August, September, July, August, September, October, November, December, the turnover was, let's say, 5 lakh. Now you have to apply the GST implications if he wants to go under the composition scheme. Now understand one thing, April, May, June, 20 lakhs. Till 20 lakhs, he is not under GST scheme. Okay, he will be liable to be registered once the turnover crosses. The turnover for normal services, if the state is a normal one, let's say Delhi, will be 20 lakhs. So at the end of 30th June, he knows that now from 1st July, he needs to be under the GST scheme. Why? Because the limit is going to cross the threshold. So in July, August, September, he was under the GST scheme and he went under the composition registration. So he went for the composition scheme. Yes. Now what is the composition scheme limit for 10-2A? 50 lakhs. So that 50 lakh will be complied. That 50 lakh will be hit by the end of 30th September. And after 30th September, he will be under GST but not under composition scheme. So for 5 lakh, he is going to pay tax at normal rate. So what did you learn here? That when he was not under the GST, still that turnover will be relevant for calculating the threshold. But when I talk about the payment of composition levy, here 6% of payment that he will do, 3 and 3%, that will not be on 20 lakh, that will be on 30 lakhs. Why? Because payment will happen only when I am under the GST registration of composition scheme. But when I am not in GST, that will be still a part of aggregate turnover to compute the eligibility. One important point to be noted, interest and discount income. So whatever amount you give and you earn interest, you know that is exempt under chapter 4. That will not form part of aggregate turnover. Neither it will form part of your turnover for the payment of composition levy. So in both the places it will be excluded. Okay. Here he will pay the normal tax rate, whatever 18% rate will be of GST. With that, I mark the end of chapter number 2. I have not taken a lot of time from you, so I really hope this was useful. Next chapter I will be covering chapter number 3. If you genuinely feel I added some content, some value in your with respect to your study, ensure you're commenting so that it helps me to reach more students, and ensure you share this, because I know not lot of revisions are available in English. So I'm trying to provide those resources to you as well. So yeah, so till we meet in our next lecture, all the very best. Study well, take care, be safe, bye bye.